The market's focus remains on the efforts of Francois Hollande and Angela Merkel to agree on a common path for the Eurozone's two biggest economies, and of course political turmoil in Greece, given the increasing risk of a Greek exit. Joining me now to discuss the forex market and the Eurodollar is London-based market strategist Gavin from National Australia Bank. Gavin, talk me through some of the recent volatility seen in the FX market following last weekend's heavily political events.
It's a good question. There's so much volatility going on through the markets at the moment. In the short term, I think there are clearly some downside risks at the moment. You know, one can understand why the speculative community wants to be short of euros, given the developments we've seen in the economy over the last 2 to 3 months, with some of the survey data turning lower, and of course after the political decisions that have happened or developments over the weekend in France and in Greece. One thing we would caution is that the kind of makeup that we're seeing of the global economy at the moment, where you've got this inherent weakness in Europe, you've got the US economy which is recovering, but some signs of slowdown in the last couple of weeks, and that is a problem for global investors, because it means that the US economy doesn't look like it's perhaps strong enough to offset some of the weakness in Europe. Now, the problem that entails for global investors or investors in the FX market is your reaction is you want to sell euros, but actually that environment that I've just described is probably more conducive to broader risk appetite declining, which will benefit the dollar but benefit the yen more, we think. And those kind of higher beta currencies such as the Aussie and the Kiwi, and indeed some of the emerging market currencies, are probably more likely at risk than the euro itself. We've got to look slightly further forward, perhaps into June, July, or maybe August, when we will get past this kind of frisson of activity that we've got in France at the moment, and towards the developments that might be taking place in Greece. It may well be that no parties in Greece at the moment can form a government, and that we have to go to a second election. And that being the case, we'd have to wait until that point to get a firmer handle on where Greece is going. We do think the chances of Greece leaving the Eurozone and therefore the European Union have risen since the weekend. We already had that at about 40-50% chance this year. And if that were the case, of course, you're going to have the turmoil that entails. Now, the popular view is if that were to happen, markets would seize on the next weakest link, thinking that the Eurozone is going to break up. That's not our view. Our view would be actually that is the cathartic event that brings countries together. The wagons are circled, if you like. Germany has no interest in a reintroduction of a Deutschmark, which would go through the roof and wreck the German economy. So that's the event that pulls things together. Yes, you could see a sharp sort of V-shape spike lower in euro-dollar were that to happen, but then it comes ranging back again as markets start to think about a stronger Eurozone going forward without Greece.
So in that case, what are your short, mid and long-term forecasts for the Eurodollar as a result of all of this political uncertainty?
We've got a forecast of 129 for June. We've had that since February from about 133 in the March quarter. That's panning out to be okay at the moment, and then we move through to September where we've got 133. Well, the kind of profile I've just outlined suggests that we could go lower than 129, we could go 126, 125, maybe even lower during those summer months before we kind of stabilise September and then back into the back end of the year once that crisis is over and the market is assured that, say, Greece has moved on and that turmoil has gone and the wagons, as I say, have been circled for the creation of a stronger union.
So Gavin, as you just said there, you now see an increasing chance of a Greek exit over the next 12 to 18 months.
Yeah, I mean, we hope that doesn't happen. It's not really in Greece's interest for it to happen, but one cannot account for the sort of fervent activity we have down there and the sort of lack of consensus. You've got so many parties squabbling. People don't really know who to vote for. This election was more about the Greek people punishing the major two parties, the PASOKs and the Democratic Party, for their past mistakes and past mishandling of the economy. So I think this has got to pan itself out into the emergence of a stronger, larger party. I think that will come over this process. This idea that Greece's exit, were it to happen, would create such turmoil for the Greeks themselves, and such travesty and pain, that it would focus minds for others to get with the programme, and you end up with a stronger core.
Gavin, thank you very much for your comments. Now we'll have more from Gavin Friend from National Australia Bank on the British pound, UK economy and Australia's two-speed economy later on Dukascopy TV. So viewers, stay tuned.